Well, I'm just happy to be here, and it's just a blast. So much fun. So, we're going to go fishing today, and we're going to talk about my favorite thing to do, which is to campaign stocks. And I'm going to define that very quickly. But first, I want to have a few minutes to just talk about kind of the current market situation. And so, here, let's have a look at the yield curve. And um, I'm going to, if I can, get a highlighter. Yeah, that's good. So you can see this is basically just some Wyckoff voodoo on the yield curve that I did. And the decline that we had since the beginning of 2017 is really an attempt to express that the yield curve is flattening, which is a measure of tightening. And so the yield curve came down and it got right to this level. I wrote a blog on it. You can go back and look at this. I think I wrote a couple of them, but it went down and it touched the oversold line of this trend channel. And then at that time, we concluded that we were likely to see a rally, and a rally would be the yield curve steepening, which is actually a good thing for the stock market. And in fact, it has been good for the stock market. But this extreme decline here was the yield curve not only flattening, but going negative. And this is 10-year to 3-month. But what's really interesting is I uncoupled these two yields, which is here's the 10-year. And you can see that since September, October, that the yield has been dropping on the 10-year dramatically. It went from 3.25-ish down to under 250. And so this has been a really steep decline. So in fact, I contend that the powers that be, the Fed and Treasury and so on, has been really lowering rates since October, especially on the long end. But the reason for that is kind of interesting because look at this 3-month T-bill chart. And you can see here that the 3-month T-bill has been just going up for really since the end of 2015 is when the Fed started raising short-term interest rates. They've raised interest rates 9 times. And this is a cumulative effect on the economy. And so the economy has continued to, come along. It's doing the best job it can. But I think that the effect of these rising short-term interest rates and the flattening of the yield curve has been a drag on the stock market and on the economy. So we know that since the beginning of 2018, that the stock market has really been in a big trading range. And so here, just changing gears, is a intraday point and figure. This chart actually I brought to Market Watchers 2 months ago. And so this is March 5th. And at that time, we could already see an accumulation forming. In this case, we're using the Dow Industrials, but we could look at any index and it looks very similar to this. And we always say in Wyckoff, especially with point and figure, is that a cause precedes an effect, and a cause is either an accumulation forming or reaccumulation or distribution. And in this case, we're looking at accumulation. Well, there was so much volatility into the end of the year on this huge decline that the volatility produced a rather large accumulation area in this particular case in the Dow Jones. And this is an intraday chart, 30-minute data, ATR scaling, and it gave us a box size or a scale of 62.53 Dow points. Well, look what it did. It counted up to, so we knew this actually early in January, we could see this completed accumulation. And it counted up to 26, round numbers 27,000, and look where we are. And on top of that, we threw over the top. Now, this is really occurred in February. I'm going to show you a current chart, which is a little different, and then came back into the channel, which we drew. We can draw these trend channels on vertical charts and on point figure charts. Here, I just want to show you that here is the range that we've been in the market, range bound buying climax, early 2018, automatic reaction, huge volatile decline, and which set the range. So notice how the buying climax, automatic reaction set the range. It traveled along the bottom of this channel into the upthrust area, and this is late September, October, and the fourth quarter was just a waterfall decline. Huge amount of price damage into this shakeout, and this is where we did our point and figure counting, which gave us the count up to the area that we're at, which is the resistance line back at the buying climax. Now, the S&P and the NASDAQ have worked a little higher than the industrials at this point. So I'm just using the industrials because that was my point and figure count work that I did for, on that prior chart. So here we are up against resistance, fulfilling a point and figure count on the intraday. And here's the point and figure count brought up to May 1st. So here, now this is a 60-minute chart, ATR scaling. Same area that's been the accumulation area where this count was taken, and it counted up into this 26,000. Let's blow this up. So this took us into this 25,514, 26,432 area, slightly lower than the other count that we had, and that's always going to be a product of using intraday data and ATR scaling. But notice this, we threw over the top of the channel. At that point, look, we failed all the way back down to the bottom of the channel and have ridden along it up to the area that we're at, a slight throw over of the top price objective of the point and figure. And now here we are turning off of that, showing weakness, coming back below the channel, which is a point, I believe, of important vulnerability. Okay, so let's just do some intraday point and figure just because it's fun. And that is, here we're looking at the NASDAQ 100 5-minute data. Now, 5-minute data can give you a lot of data. It's a different theme than 5-minute vertical charts. And so we just want to get a sense for initially how far down this market could go. NASDAQ 100, we can see here that we have 30 columns, which changes quickly on intraday, but this gives us about a 4.5% decline off of the peak that we have right here at 78.47, takes us down to 75.67, 75.02 into this area, which really takes back, this is April 3rd, this rally that we've had, which produced this beautiful up trending channel. Attempt to get above the channel for a while, was overbought above there, and then just fails right back down to what we call the demand line. Rallied up again to the top of the channel, tested it twice, and now it's in the process of failing. But this count takes us takes back all of the rally back to the beginning of April, which the way the market's trading today, it appears that that's entirely likely and could happen quickly. Okay, and now this takes a little imagination, this chart, but we really try to focus on this with our students and attendees to our workshops, is the idea of visualizing changing structures. So the idea here is that we have 3 big up thrusts. Each one of them has a slightly higher high, and then consolidates, slightly higher high, consolidates, and then these are diminishing thrusts. And then finally we have a 4th thrust, which doesn't go to a new high. Now again, this is just 5-minute data, ATR scaling, so this is potentially a very short-term phenomenon. But we count this with point and figure. It takes the Dow down to 26,076 at this level right here. But notice that this takes us down to important prior support right here, which makes a lot of sense. So the point and figure says we're going to go down to this area. Well, let's say we do go down to this area, and then we attempt to rally up, go to a lower high. Well, now this whole structure potentially could become countable from a point and figure perspective, and we could have a much larger count that could come into play or come into force. And so this is something that we need to prepare for, is the idea that if we have a rally of poor quality after a decline down to this initial count, that it could produce a larger distributional type structure. So we will keep a close eye on that. And so now I want to introduce campaigning stocks, because here we are talking about intraday, but campaign trading, in my mind, is a very long-term orientation type of trading, which Wyckoff is very attuned to. It's very good in this space. I would say that by far the most Wyckofians are swing traders. Swing traders we think of as being trading opportunities that are 3 weeks to 3 months, maybe 6 months. But this is swing trading. Wyckoff is really good at this, but Wyckoff is also really good at trading these campaigns that can last years. And I really like doing this type of long-term campaigning. And the inspiration for this really goes back to my youth. And I'm going to make this a very short story, is that when I was a boy, I worked for my dad as a concessionaire at racetracks, horse racing. And I may have mentioned this in the past, but when we would go to different fairs, we would have different people that would work with us every year. And they were just wonderful people, really interesting. But I have to say, growing up at the fairs was a little like being in a Fellini movie. And so it was really interesting. Subject for another day. But one of the people that I really had a great time working with was actually a retired banker. And he really enjoyed coming and working for a few weeks at the racetracks. And it was a lot of fun. He was a lot of fun to work with and talk to. I learned a lot from him. But the story that really stuck with me was that he was a really devoted fisherman. But he was only interested in one kind of fishing, and that was trophy fishing for bass. And so he would spend his time with me describing all of the detail and all of the strategy that he employed to identify and catch trophy bass and these absolutely magnificent, very large fish. And he loved to catch them, and I think that he always threw them back. But he just was obsessed with this. He loved it, and he went into how the kind of bait, how he baited the hook, where he went, and there was tremendous detail, as you would expect from a banker. And my understanding was he was an exceptionally good banker. And so that story really stuck with me, and I realized that if you organize your life to get what you intend to go after, that you can continue to just refine and create mastery at being able to identify and achieve what you want. And so I became very interested years ago in campaign trading stocks that could go up for years and years. And I realized early on that Wyckoff was really good at this. So I developed my tools, as my banker fisherman friend did, to identify and catch these big, beautiful fish, that I could do the same thing with campaign trading stocks. And the thing that he really impressed upon me was that he would go out fishing all the time. And his expectation was, because of the way that he set up his equipment, that he would only catch a fish occasionally. And it could be days and days and days of fishing before he would catch a fish, because his whole setup was oriented towards only the largest and best fish being able to even hit on his bait and on his setup. And so I realized that this is, so all of this really impressed upon me. The campaign trading is something you do all the time, but on occasion you really catch a big one, and that this is the goal. So having said that, first of all, I want to tell you that we have a special going. We have our Wyckoff market discussions every Wednesday, and we currently have a special going. We had a free webinar yesterday, and the next 3 sessions, which are the next 3 weeks, we're doing a 3 for $30 special. And if you go to the website, wyckoffanalytics.com, you can join our group and find out what we're all about. If you're at all interested in the Wyckoff method, please join us. And we have just a great time. We have a great community. Okay, so here we go. This is Dr. Pruden's adoption diffusion model, which we've talked about. I've talked about it in power charting. And the only thing I want to talk really about here is that this area is where bases are built, accumulation areas for very large moves upward. Campaign trading is about identifying the conclusion of accumulation, the beginning of an important markup, and then when you're campaigning, you're participating in the markup from the beginning to the conclusion. So early on here into the distribution area and participating, you might be adding to your position, but the goal is to stay on the trade throughout. And this is what we do when we campaign a stock. Swing traders would come in and out of the positions on the way up, which is a wonderful strategy. And I don't discourage that at all. It's just a different style. So come to power charting tomorrow. I talk more about campaign trading in tomorrow's episode, but I will talk about the schematics and how these are the areas where we build point and figure counts. And they're very important because that gives us an idea of how far up these campaign type stocks can go. So here, same thing. We have reaccumulation here, big counts. Oftentimes we don't see a campaign candidate until it's already been in its uptrend. So I've written a lot about campaign stocks in the blog, Wyckoff Power Charting, and I try to focus on those because they are, they're useful for swing trading and campaign trading. This was a stock that I wrote about back in 2016. This is a really nice, very large count in Micron Tech. This stock went up to $60. I consider a campaign stock one where you can identify with point and figure analysis a better than a 100% move. And the goal in campaign trading is to have multiple 100% moves over a long period of time. And so here we had a count line that was around $12 in a stock that went up over 60 at the conclusion of its advance. And so this is the goal here with campaigning. This is a stock that I wrote about, Albemarle. It's a chemical company, and I did analysis of the accumulation area, and then I did a big over the course of 2 blogs. I did a big analysis of the point and figure. So here you can see I put this point and figure in because I want you to see the model. Here are 2 segments. The first segment counted up to 91.86, and at the time that we did this analysis, it was at $66. And then the larger count went 110, 115. And so this isn't quite a 100% move, but pretty close. And this was a great campaign stock. And also you can see here that the counts could even be stretched out further. So there was definitely the potential for a more than a 100% move. Well, this is what actually happened. You can see this chart on the May 27th, 2017 blog. But here's the base count we just looked at these two counts here, and then a reaccumulation count that went 120, 125 from this area down here where we started our analysis, right in here. So we now have a count 120, 125 in this great campaign candidate. Well, this stock went up to 140 at the conclusion. And that often happens, is that they even exceed their point and figure counts. And so this is an example of what we're trying to do. And we were actually writing about this in the blog. A much more recent blog, which was a few blogs ago, was Wynn Resorts. And Wynn has this beautiful accumulation area that has formed from March back to October. And this has resolved into an uptrend. And this uptrend is now marking up out of the accumulation area. Looks very promising. And this is a cyclical advance. Now, I just want to show you, this is China large cap and Wynn superimposed on the same chart. And you can see the correlation is exceptionally good. Wynn tends to be more volatile. Look at these beautiful, this beautiful advance that took place in Wynn and China large cap. And then when one turned, the other turned, and they both went into cyclic declines into the end of 2018. And now they're both advancing again. And it could very well be that Wynn and FXI are campaign candidates, and they're acting quite well. The other thing that we look at in campaigning is we definitely want leadership. And earlier, Tom showed you some relative strength studies. These are very important to campaigning, and I'll show you some additional charts in a minute. But here is a turn in the relative strength of FXI to the S&P, where it's now in a leadership position. It's outperforming the S&P. And finally, here's Wynn point figure analysis. Here's the distribution. Look how well this worked. So this is the distribution area, 96 down to 78 with a midpoint of 87, went right into that zone. And then we were able to build a count. And so the count line's at around 112, counts 198, 218. And so we can see, a markup is beginning, and we could actually make a bigger count in this chart later on. We tend to be conservative at first, conservative thresholds first, and then bigger counts later. So this counts potentially back to the highs. So as long as China can keep leading and Wynn keeps leading, this could be a wonderful campaign candidate. So another one is CF Industries. CF Industries has built a really nice count back in 2016-17 that goes to 74.5, 79.5. And then it just built a reaccumulation count that confirms the base count, which goes 78 to 81. And currently we can see that CF is around 45. Now, we know that some of these are just not going to work. As a matter of fact, a lot of them don't work. Another thing that's important is it's important to have the tailwind of the market at your back as the stocks are going up, because a strong stock market supports these campaign stocks. My tendency is, if I find a campaign stock, it's doing all the right things, irrespective of what the market is doing, I just want to get in there, be exposed to it, and then build a position as it starts to work. And so this is really important. And then also you want to have stops below these important levels. So here we have the bottom of the reaccumulation area. Have stops somewhere below this area so that if it does stop rising, and you can see it's rising now, and fails back below that area, you get stopped out, and then you keep an eye on it. It might come back and start to work again. Now, what I want to do, here's FMC. I'll just show you this. Current price is around 80, 81. Has a count to 111, 125 on this first segment right here. But notice there are two more segments. And these two segments generate much higher prices, and FMC is very close to its prior highs and appears to be completing reaccumulation. So this is very encouraging, and so this is definitely a campaign candidate. Now what I'm going to do is I'm going to go forward here, because we are going to talk about some of these stocks tomorrow in power charting, which you'll be able to watch on demand or watch 3 o'clock Eastern tomorrow. But here are just some of my favorites that don't get talked about in the show tomorrow. And I'm going to talk more about campaigning in the future. So here is Deere. And you can see that Deere has built a substantial accumulation area on this chart in the area of the 135 to 152 area. And this accumulation area counts up to 176, 168, which is right at the prior highs, and then up to 260, 268. And so this count right here is the initial count objective, and then this is the larger count objective. This looks like a campaign candidate. So have a look at that. Here's a vertical chart of Deere, just so you can see that it had just a really dramatic run up into the January 2018 highs, and then appears to be in reaccumulation ever since. It's become very dull and quiet right here at the end, and this whole area could be a very large count for a much bigger move. Oh, the other part I want to point out is relative strength. The relative strength has been correcting back to a rising moving average. It's in an uptrend right now. I would expect that when it comes back to a rising moving average, that it would want to then turn up, and probably conditional on the market, but turn up and start to rally again. Lululemon, this is a very interesting stock, and it has 3 sectors. Look at this. This is a 5-box reversal point and figure chart right here. So that's like comparable to, say, a monthly vertical chart. 5 boxes like a monthly, 3 boxes like a weekly, etc. And so you can see here that just the first segment of Lululemon goes up to 212, 233. Now, it could take years for these objectives to be met, but that's the hard part about campaigning stocks, is because you have to go through these periods of sideways action, big trading range where it just becomes volatile and trendless, and then you're in the stock. You just continue to hold it, and this is part of the art of campaigning, is that you got to go through the difficult times, because these good growth stocks will go down 30-40% in their consolidation periods, and they'll build new counts, and it shakes out all the shorter term traders. But if you buy right and you're in at good prices, you can weather that, even though it's just not any fun. But trend trading, that's the nature of it. It's part of the art of it, and we have to steel ourselves psychologically to be able to do this. So this stock, I think, is very interesting, because somewhere out in the future, it could fulfill all 3 of these segments and go to much higher prices than what we're seeing right here, potential to 212, 233. Okay, so let me go have a look at the Apple campaign completed. This is a campaign that we did real time in the blog, and we actually identified this accumulation area right in here, started to campaign Apple. We had these counts, and so you can see there's 2 blogs to go look at. There's the 2016 blog, which is this area right here, and then the 2019 blog, which, here we go, 3 years of campaigning this stock. Well, it finally did get to our counts and fulfilled them almost perfectly, and then showed weakness. I don't think this is necessarily a problem for Apple, but it wouldn't surprise me that Apple is range bound and needs a period of time to rest and build new count for a new move. I think it's too early to tell. We don't have a cause build for going up or a cause build for going down. And so last thing I want to show you is just some stocks that I've looked at, and I'm just going to put the chart up. You can write the symbols down and study them for yourself. Here's a little gold company that I think is acting well in the gold space. Gold's not acting well right now, but it could turn at some point in the future. I think gold could be a campaign. Here, this is a case study. This is not necessarily a campaign stock right here. It's built account. This is Interactive Broker. It has built account that goes back above the highs. But look at this. Look at this beautiful. Look at this. This is a beautiful case study on how to campaign. And then look at it just get active. It goes into a reaccumulation. The reaccumulation confirms the accumulation. It throws over briefly and then goes into a cyclic decline. And this could be forming a new accumulation for a new move up. So, great case study. Schwab, I think, is a very interesting potential campaign stock. And so it's got a base count, a conservative base count, 8180 to 7788, and then a larger count that goes up to 154, 170. And this is a stock that's right around $48 right now, or $45. So there is a great campaign theme. JBL, this is one that also I'm trying to campaign. You can see it's had a really good rally up to the resistance area, large count, relative strength is leading. Shake Shack, we've talked about that here in the past. Relative strength has now gone positive again. It's got a beautiful, very large accumulation area and has the potential to go much higher. This is a chemical, TPIC. It has an accumulation area, IPO, and now it's trying to build another reaccumulation for a potential move higher. Acacia Communications built a base. It's a little extended here, but it has relative strength leadership, which is all important. Altus, big base, jumping out, acting really well. It's got a counts high, much higher. So I'll leave you with that. Oh, and here's one that I talked about. Go back and when you see on Stock Charts TV, my point and figure workshop that I do, which is a two-part workshop, and they show it every so often. In the second part, I do a big analysis on Walt Disney and do this whole area, which is a huge count area. Look what's just happened. Now, I did this video back last summer, and since then it's continued to build a reaccumulation right here at the resistance area. Huge jump out, and now it's consolidating that jump. But I just think that means that Disney is just ready to start to become another campaign stock once again, as it was into 2015. And with that, I know I'm running out of time. I'll leave it at that, but we're going to talk more about this tomorrow in power charting and continue to talk about how we can identify campaign stocks and how we can emotionally prepare ourselves to get in these stocks and participate in them for a long time. So with that, here we are.